Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, we're in a time when unchanged is about the best we can do. Chinese markets will be back later today after their 4-day Dragon Boat Festival holiday. They'll no doubt be back in a sombre mood. Part of the restrained enthusiasm may be because of severe flooding in southern China. Also sombre is that Chinese company profits in the January to May period were down about 20%. It was less of a decline than the January to April period because May profits rose 6% from April, but they were still down 7% year on year. And Chinese unemployment levels fell marginally in May from April, declining from 6% to 5.9%. Even though the locals won't feel this is much of a relief, it is much better than what is happening in the rest of the world. In the US, in its annual stress tests, the US Fed said a long economic recession could saddle the country's largest and globally important banks with up to $700 billion in losses from bad loans. It has told them to restrict dividends and temporarily end share buybacks so that they can conserve funding from the coming increases in financial stresses. Also falling is the Fed's balance sheet, which shrank for a second straight week. The reductions seem odd when their economy clearly needs additional support, but maybe it's their way to get the fiscal authorities to do their part. And the latest consumer sentiment index in the US rose in June from May, but at a generally underwhelming rate and far below expectations. The best gains were in the northeast, where the pandemic is under better control, but the rest of the country is clearly increasingly anxious. And data for personal income in the US is concerning too. It jumped in April on the income support that Congress rushed through, but that support hasn't been followed up with new efforts and is mired in partisan gridlock and restricted by Republicans. That has resulted in a very sharp 5% fall in real disposable income in May, while at the same time personal spending rose more than 8%. Obviously, it can't continue on like this for very much longer. Past lifestyles can't be maintained by such a huge mismatch for very long. The US Treasury 10-year yield is lower at 0.64%. That's 4 basis points pullback from Friday as market fears build. The gold price is marginally firmer, up another $9 from Friday to $1,771 an ounce. And oil prices have softened marginally. They're now just over $38.50 in the US, and the Brent benchmark is just on $41 a barrel. And the Kiwi dollar is softer in a minor move down at just on 64.2 US cents. On the cross rates, we're slightly firmer at 93.6 Australian cents, and against the euro, we're holding at 57.3 euro cents. That means our trade weight index is held at 69.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.